Hello, and thank you for joining us today. It's Wednesday, or excuse me, it's Thursday, January 15th, 2026. Welcome to the new year. We're glad that you've joined us here at managing mastering the BizProValue Management Solution. My name is Ray Skaug. I'm one of the founders here, and I'm here with my colleague, Dan DeLano, and from our West Coast office. So we're glad that you're here, and um, we'll continue in the webinar here today, and we will talk about the difference between a base project and a detailed project. And then we'll also be looking at the transcript of seller interview, a new feature that will be deployed next week, where you'll be able to gather information from your interview and import that directly into the portal. So let's go ahead and let's make sure, and I will look here in chat here, and I'd like you to just make sure that we're not experiencing any technical difficulties and that you're able to see the screen. And if you'd like to give perhaps a thumbs up on that, we'd appreciate that. And that's very good. All right, so let's go ahead and share my screen, and let's take a look at the portal, and let's see what we have here. And Dan, I'll just let you confirm that as we move throughout the move throughout the webinar. Okay, so today we're going to be talking about base projects and detailed projects. So the base project I've created here for the demo HVAC company, or a detailed project. The base project is an excellent tool for quickly scanning a project for lower price deals and uh, well, for those primary two purposes, for scanning the deal quickly and for a lower price deal, particularly if, say, for example, the company does not have a balance sheet or there are not assets involved there. The base project may be a suitable project there. So let's quickly take a look at that, and then we'll create a project as we go along. So in the base project, you can see here across the module bar that we have some items that are visible or available to us, meaning the income statement and most probable selling price. Those are the modules that are available in the base project, and it's made for speed and a high level or a higher level estimate of value. So here we have our income statement. We can do all our normalizations. We can click and make our normalizations as we wish there in all years, and I won't do that at this time. But here, when you click on the year, you can make your adjustments. A positive number increases the unadjusted and then increases the normalized amount, and a negative amount entered here decreases the unadjusted amount so that the normalized amount is smaller. So that remember the formula here is this column plus this column equals the normalized column. So we make our adjustments accordingly there. And let's go ahead and create a project, shall we? Let's create a base project, and let's use TaxTrack to do so. And let's call this Demo 2 HVAC Company. And you'll notice here that the project name will be automatically developed. It'll concatenate, or the content that you enter here will automatically fill here. But let's say that you um, don't wish to share the exact name and want to use a redacted name. So now the project name will be shown the company name, which is typically I put the name of the subject company on the tax return here, so I have a record of for my files. But then my project name is the public-facing content. So here, let's call it a broker estimate of value. And you'll notice that the project type will default to a base setting, whether you have without regard to the type of of a subscription plan that you have, it'll default to the base project. Now let's enter in our years, and let's say that we'll select 5 years. My preference to have 5 years for a little bit more transparency of information. So let's take that and let's go to a couple of things here. Let's go to demonstrations here. And here we have our tax returns. So here's 2020, and here I have my income statement. Now, because I'm creating a base project, I can only add one statement, one page, and here are the thumbnails of that page. You can click on the individual pages and see a larger thumbnail. And here I want the income statement. So again, we're doing a quick estimate of value. So all we have to do is look at the income statement. We can do this quickly and receive and develop a good indication of value. Clicking on it, saving it. 3 years is typically all we need. However, because we can, and it's so easy, I like to have all 5 years. So then let's upload that, and TaxTract will do its work. It will upload the file. It'll give us a little indication that it's done so. The form has been uploaded successfully. We're reading the income statement, our progress indicator, a progress indicator here tells us too that we're working on that. It automatically created the project. You can see that my company name, Demo 2, here. You can see that the forms have been scanned successfully. Come to the indication notification bell and click on the report name. And here I have my data. So I have my income statement for all 5 years. And again, I can come in and make any normalizing adjustment that I wanted to make. So in the base project, we have the income statement. We don't have the balance sheet or the other modules. We're taking a quick look at this project. Here I have the summary method, meaning that I'm taking the economic benefit of revenue, EBITDA, seller discretionary earnings, and I'm applying a weighting. By default, an equal weighting will be applied to each year, and a default growth rate will be applied to give my year one forecast. If I felt that these numbers were trending in a repeatable and recognized manner, I may take this and say, 10, 15, 20, 25, and excuse me, and develop a weighting there. But let's go ahead and just leave that at 20%, shall we? And here you can see that my revenue, EBITDA, SDE is I have a weighted average. Here I have a year one based on my growth rate. And here I have the multiples on a 2-digit level for all of the industry in that sector. And I have my performance rating, and I'm allowed to place this as I think is appropriate. And here I have a value of, let's say, and here let's put a weighting of 100%, or let's go ahead and just leave it at 25 and 75 because that'll allow us to compare to the other projects. And here I have a value of 979,000. I can look at my report. I can decide what I want to have included here. And since I have not added any rows, I'm going to not include this detail statement, and I'll just use the summary statement. Okay. Here I can preview the report. I can download the report. Let's use a 2-page view. And here you can see that I have my cover page, my introduction, business performance, my income statement, my introduction to business value, the market approach, my $979,000. I have my 3-column recast if I wish to include that. And again, I made no adjustments, but here I could I could include in the report and have notes so that the seller, for example, or any reader could make a comparison of the source data to the finalized normalized data. So this is a base level broker estimate of value. Now let's go and create that detailed project. And why don't we just do this? Let's just come to this detailed project, which I did earlier. So we would follow, although no, let's go ahead and create this project. So now let's call this demo 3 HVAC company. Let's just leave that in the name. Now let's call this one a broker opinion of value. Let's create a detailed project. Let's use those same 5 years of tax returns. Select the form. Let's browse our file. Here they are. But now we're going to be able to select multiple pages. And in this case, I simply have some excerpts from a full tax return. For example, if I had a 50-page tax return, you would see all 50 pages, and then you would select the relevant pages. Here I know that I want the income statement. This looks like the balance sheet. Yep. This looks like the other deductions, and I want that. If the Form 1125A for cost of goods sold or Form 1125E for officer compensation was included, I could have selected that, and it would import into the project as well. So again, the pages that I want here, we'll do that for all 5 years. And, if there is any question, what is the content? Simply click on the page and you'll see the thumbnail. Yep, that's the income statement. Yes, this is the balance sheet. You can see there's a beginning of the year and the ending year, beginning of the year, ending values. Let's select that, as well as the other deductions. Now, in this particular case, in 2024, I have a tax return and the other deduction spills over to a second page. So I want to capture that as well. So now I have all 5 years uploaded or selected, and now I'm going to upload those and we'll let it do its work. TaxTract will go through the same process, uploading the forms successfully. It's reading the forms. It's created the project. Here, I did not redact the name. I just left the full name. It is this project name that is presented on reports. It's doing its work. I have a progress indicator here as well. Now, in the detailed project, we'll gather some additional information because we selected additional information, right? Okay, so let's click on the notification bell. And now you can see that I have the income statement and the balance sheet and the performance comparison. All of my modules are active and I can see. The way I would typically build a project is first, I'd come to performance comparison and I would select a filtered group. I want a 1 to 3 million, and I'll see if the Risk Management Association presents data. And here I have my data for my industry and in my comparison group. And here I have my subject company. Now I can start making some measurements. How is this company performing relative to its peers? I can see the numbers in numeric form here. Now I can see them in graphic form here. For example, I can see in graphic form this growth rate. I can see the gross profit margin. Here's my subject company. Here's the industry. Here's the comparison group. Now I can look at operating profit and I can start making some deeper understanding about the performance of the company. Here it looks like this company is performing very consistently over time. And now when we start getting down to the bottom line measures, the subject company's performance is significantly greater than both the industry and the comparison group. The comparison group had higher gross profit than the subject company and the industry, but that may have been simply how is my subject company recording expenses? Are they putting more expenses in cost of goods sold than maybe the industry does? And it looks like that may be the case here because now my operating profit is significantly higher. So as I work through the income statement, I see that there may be some noise here based on costs of goods sold and what is included in cost of goods sold in the subject company compared to the industry or the comparison group. And it'll perhaps get washed out as we go further on to the operating profit and ordinary business income. Now I see some performance of profit before taxes in relationship to total assets. And I see that my subject company is performing significantly higher than the midpoint of the industry and the midpoint of the comparison group. Here, this is the high point, perhaps around that 75th percentile of the subject company. And so of the comparison group. In contrast, my subject company is performing well above the midpoint and maybe at that 70th percentile. Similarly, for EBITDA, my subject company is well above the industry average and the midpoint for the comparison group, not quite up to the 75th percentile. All right, I like that. I can start seeing my activity drivers regarding the cash conversion cycle, and it looks like their cash conversion cycle may be a little uh, faster. That could be a good thing. Okay. So now when I start looking at my forecast, let's do one more thing. Let's come back here. Let's look at our growth rate. We've had almost 3 over 4, 4.6%, 3. So if I want to come to my forecast, I might very well say that a 3% change factor is reasonable. Let's go ahead and default this, or let's set that to a 0. I guess we'll leave that here at 25%, and I'll show you what that means. It means that in our forecast, we will be applying an allowance for tax returns that can be useful. In the income approach, in the market approach, we'll see that EBITDA will add that back. So that's not really a factor here. But now you can see that I have my 3% growth rate here. I have an equal weighting across all years for my cost structure. And now you can see what my forecast is for my year one. So now you can see here's my historical performance. Here's my forecast performance. Now I can come to most probable selling price. And in this case, I may have wanted to increase this perhaps to that 70th percentile. Now my price, $1,079,000. So I'm about $100,000 higher because of the informed judgment, all else being the same from the base project, which came in at 979. Now I'm coming in at 1,079,000. And that's the benefit, I think, of transparency delivered in the detailed project. Then I can come to what I like to do is come to the illustrative term sheet and say, all right, what do we include? We're going to include the assets needed to perform at this level. Okay. Let's add that. Let's lock my number so I can actually make some entries. Okay. Here, we're going to include these other and intangible assets. Now, we're going to include the inventory as a seller. I don't want to take all this HVAC materials, air conditioners, and heating devices. They're going to go. But and these other assets, that's going to be included. So, now a question is this inventory included in the price? And we have some question. Should it be included in this price of $1,079,000 or should it be in addition to that? Now the base project the detailed project informs us because now we can look at our working capital need and based on our assumptions about the 20% here, that's reflected here, our weighting, so that in the forecast period, we're going to need a buyer is going to need to start off with about $71,000 worth of working capital. And why is that important? Why is it important to understand how much working capital a buyer is going to need? Feel free to put any answers that you might feel in chat, and then we'll address that in just a second here. Okay, so the question is, in the illustrative term sheet, we've gone through and we've started to identify the assets that are going to be conveyed in the sale transaction. Now we need to say, is there a sufficient amount of working capital? How much working capital? And is that working capital included in the price that we developed in that market approach? So let's take a look here. And we're going to say there's 71,000. And the reason why it's important to include this working capital is because undercapitalization is the primary reason for business failure. Remember that there'll frequently be a question that says, I have profit, but where's my cash? I'm selling just like the previous owner did. In fact, I've got new business. I brought in some additional inventory. I took on some bigger jobs that extended my accounts receivable. And the answer is because of the timing of cash flows, I have profit, but it hasn't hit the bottom line yet. Cash has gone out of the company to buy more inventory. Perhaps I even use some cash to buy a new truck for myself. I'm the seller. I've depleted that cash, and now I have to make payroll. And what in the world do I do? Or even in normal situations, I haven't made any extravagant investments or purchases, but I've just sold items, and most businesses are going to sell their product and services in some combination of cash sale and credit sale. And so the biggest impact is that accounts receivable are going to grow. If I don't start with working capital that can fund that buildup of accounts receivables, I'm going to have a really tough year. And that's why there's a lack of working capital is a primary reason for business failure. So, as a diligent broker, I'm going to include working capital. 31,000 of that is the working capital, but I'm going to add cash, and I'm arbitrarily going to just increase that a little bit to $50,000. So they're actually getting maybe $81,000 worth of working capital. Let's see in Q&A. Dan, I'm going to let you present John's answer to me in the chat room so that I don't have to worry about going back and forth. But I'm eager to indicate or to see what John's answer was about working capital. They need to have more cash available above the purchase price to start the business. That's exactly right. So a little point of caution, and the lender will certainly look at this, that says, has the buyer invested their last nickel to buy the business? If they have no personal assets or personal cash available to inject in the company after the acquisition. Now, they'll keep the business and the person separate, but still the point is that if a buyer is putting in all of the cash that they show on their personal financial statement as a source of capital, a lender may be a little bit worried about that because there is no post-loan liquidity. All right. So one of the ways that we increase that liquidity from the beginning is by looking at working capital and at the illustrative term sheet, make sure that we have loaded that company. There's inventory on the shelves. There's cash to make payroll. There's cash to function, even when accounts receivables are created, not collected for 30 or 45 or 60 days. So there's cash to support the buyer. Now, the question is, we've included these assets, and should they be included in the sale price? Let's look at some of these things. The buyer should obtain all of the operating assets needed to accomplish or perform at the projected level. They're certainly going to need all of the fixed assets. These are assets that the company held on their balance sheet, and they should likely convey to the buyer. Now, the seller may need to provide some information about what these things are, particularly around these other current assets. Some of these other current assets could be prepaid expenses. So we had forecasted rent expense is going to happen on an annual basis. Well, maybe there's some prepaid rent, or maybe some prepaid other items. So in effect, this could increase the constitution of this other current asset, could increase the selling price. You can adjust that by the multiple that you select or otherwise. So the things that will show in BizProValue here are the cash. We're selling this as a cash-free deal, debt-free deal. So cash is almost always not included in the price developed in the cash flow approach, right? So the normal amount would be zero, and the excess amount is $50,000. Now this $31,000, that's a fair question. Should it have been included in this $1,079,000? Well, the working capital module will answer that question for us also, because we can scroll down and we can look at the industry comparison group, and here it shows that they don't have inventory on their balance sheet. Now, this data is coming from the Risk Management Association, but we'll infer that the average company in the RMA data, which comes from banks, is equal to the peer comps data, which also comes from banks. Both of them, RMA and peer comps, are serving this small Main Street deal, right? So here we have an indication that most HVAC companies don't carry any inventory. Our subject company has 7.5 days of inventory. That equals that $31,000. So here for a subject company, a comparison company having the same cost of goods sold, they would have no inventory. Therefore, the subject company having $31,000 worth of inventory, in my judgment, means that the $31,000 is not included in the price and rather is additive to the price. So the cash is added, the inventory is added. We've got $81,000 worth of working capital. The model suggested 71,000, so we feel good there about the company being able to perform at the same level. My $1,079,000 now becomes $1,160,000. So that, in my opinion, is one of the first benefits of the detailed approach. So we saw in performance comparison, we see the most probable selling price. We work through the illustrative term sheet. We work through the working capital module for working capital and inventory, and that helps us then to make sure that we're setting up this buyer for success. Then we come to the financing model, our price of $1,000,001 with a typical loan and cost structure and interest rates and term. Here we have a debt service coverage ratio of 1.45 versus 1.54, versus 1.25, 1.47. Now remember, this is business cash flow, business debt service. We've not included anything in for the buyer, and And that would be what we would call global debt service coverage, but we've still added an allowance for taxes, even though this is an S corporation, and taxes, yes, are going to be paid on a personal level. By creating that allowance for taxes here, we've replicated how the bank will look at that and say, what is the cash flow available from the business to support this business debt? The assumption is that in the income statement, this salary of $85,000, which we could have adjusted if we felt it was proper, is sufficient to meet the buyer's personal needs. So here we have used a market rate for officer comp as well as rent and so on. We've said that all of these are market rate, therefore we're safe in developing our value. But when we come to financing, we might need to ask the seller, excuse me, ask the buyer, is this $85,000 sufficient to meet their personal needs, their living expenses, their personal debt? It may also give an indication that, particularly when you see the personal financial statement, a buyer may be used to living a lifestyle that is supported by another contributor, perhaps a spouse who also has funds. That spouse, if the buyer cannot live and support his house and his personal debt on 85,000, that additional person may need to be a guarantor on the loan, and the bank will perhaps may not request that, but that could come up, and it's wise for you as the broker to anticipate that. So in our financing model, here we have a debt service coverage, and it's assuming that the $85,000 is sufficient to meet the personal need. And then the impact is that the global debt service, meaning the business and the buyer, is essentially the same because that 85,000 was simply a one-to-one, met all of their needs and did not create a demand for cash. Therefore, our debt service coverage ratio looks great. Okay, so lastly, in the detailed project, we have seller proceeds. It says here we're selling for $1,060,000. Here's the cash that you're retaining, accounts receivables. You're paying off liabilities that are not part of the transaction. You have 58,000 of seller financing, so the seller's not receiving that 58,000 now. Rather, it's receiving it in based on the terms of a promissory note. There's some selling costs. Let's say it's $100,000, so that now we can estimate the seller would receive $1,019,000. And of course, that's before tax. We're not providing any insight regarding tax. Our numbers here are simply for illustration, educational purposes. They are not for financing, legal, or tax purposes. But we can estimate what the seller would have. I think that the question was whether that's a U.S. or a Canadian tax. Uh, the tax amount is a function of the taxing authority, whether that was whoever that was. Now, keep in mind that in this financing model, this allowance for tax, you'll want it as a deeper dive, you'll certainly want to look into well, put it this way. The bank is going to be looking at the buyer's personal tax returns, and they will gather a effective tax rate after all the adjustments and personal allowances and deductions that are on the tax return. You effectively say for how much taxable income what is the tax that was paid, and that's your effective tax rate. And that's what we're meaning here. Now, that may need to include some state and local taxes if relevant, but that's the amount, this 18%, whether that's a US or Canadian, without regard to the taxing authority, we could have a taxing number and we would know what that is to give us our debt service. So, because that allowance for taxes is controllable by you, John, you can use that with any taxing authority. Okay, so here we have the difference between a base project and a detail project. And now I want to spend just a few minutes and let me do this. If you would like, if there are any questions in particular regarding the base and detail projects, it's most useful for me if you use the chat. But if you use a question and answer, my colleague Dan can convey that to me with my chat bar open. But feel free to ask any questions that you have. The point of our conversation was that we looked at base projects and detail projects and how they are created and the benefit of each. I want to give you a heads up about what is coming next week. And when you create a detailed project in the advisor plan. So in the advisor plan, we are augmenting the value canvas. In all plans, you know that we can read regarding revenue from the subject company's website regarding the questionnaire. We can email that questionnaire to your seller. Let's just send this to myself. And let's say, please tell me more, or please review and edit. We'll send that to the seller. Now the seller, which in this case, I'm sending it to myself, right? Okay, so I receive an email. It looks like this. This is the This is the email that I received from the business broker. I'm acting as the seller here. I can click and provide answers. You can see that there were answers that the broker had already populated. Say we had gone through this previously, but the seller would see these answers and could edit those. The seller could review and submit. Are you sure? We'll say yes. The seller now receives a thank you in my inbox as a broker. I receive an I receive a notification. Hello, your recipient has submitted the questionnaire. Great. I was hoping for that. So now I can come as the broker. I would also, or for example, the seller would also receive a thank you for submitting it. Okay, so the seller was immediately given a thank you. They receive in their email box this notification. You, as the broker, receive a notification that the seller had updated that information, and you would see that information and you could apply it here. But what I want to show you is that now we've added an additional way, and that is the transcript file. So here you will be able to import and review a transcript. Let's just say it's this one. Let's say that you have a Zoom interview and you've recorded that interview and you've gone through and you've asked the questions. What are the key services, products or services sold by the company? And now the seller is giving their answer, and you're asking perhaps a follow-up question. And my recommendation is that for you as the broker, you should ask the question clearly. However, the seller, as they reply, yes, kinda. So the conversational style is fine. So your Zoom or Fathom, whatever your IT is, will create this. Frequently, you'll receive this as a text file, right? Well, it could be a text file, a PDF, or a Word document. However, you have a record of the conversation, you will be able to then to upload that transcript, as I have done here, and then you can run the subject company questionnaire in the value canvas. So let's go ahead and clear, for example, all of these answers. All right. Now let's run those and say, based on that transcript that I uploaded, you would upload that transcript similarly to how you would upload a tax return. click on the browse, select the file, indicate that it is, and now BizProWriter has read that transcript. Let's see if I can split my screen. Okay, so BizProWriter has read this transcript and applied the answer provided here. Yes, at the core, we're an HVAC contractor providing installation, service, and repair. Here we are, an HVAC contracting services, including installation, service, and repair of furnaces, everything that's done there. John, I hope that you like that. I can imagine this could save an immense amount of time of how do you capture all of the narrative from your seller. And you know, it's like gold. The seller knows so much about their business. How do you capture it? How do you convey it in a useful and a meaningful way, all within one application, so you don't have to copy and paste and go from here to there and so on. So just like we solved the quantitative information of taxtract, now we're solving the qualitative or the narrative information in BizProWriter by importing the transcript, whether it's in text file, a Word document, or a PDF. If you are using an Excel file as your questionnaire, you will need to save it or export it to Word, and you can do that readily. We can't read an Excel file. They're simply structured a little bit differently. But if it's a text, Word, or PDF, now we have all of that information in, and now we can similarly ask all the questions, let it write it from the transcript. It's reading the transcript, getting rid of all the ums and ahs and you knows and kind ofs, and putting it in here. And then all of that information is available throughout all of the modules. Repeat the process, and then fill the value canvas, which now takes all of your questions and answers and creates the 4 factors of value. How the company creates a market of customers, creates value, operates efficiently. John, you indicated that you're using Plaid AI. Um, as long as you as long as you are importing here a text, Word, or PDF document, you'll be able to gather that and do it everything right in here, so you don't have to go from one application to the other. You'll have a permanent record, you know exactly, and you'll be able to communicate this. Excuse me, I see the typo there. Got it. So here we're solving that where you can add your content and then develop your business summary, your deal summary. It'll even read a goal analysis, which is similar for a SWOT analysis to identify what are the great achievements, the opportunities, action steps, and limiting factors. And remember also in the detailed project, not only do you have the subject company questionnaire, but you have the company profile, which lets you talk about the company. You can create milestones. You can discuss more in depth about the location. And again, here you can add any question that you wish. You can select the default questions. You can add additional questions. So you can gather information, and it will then be useful to you to inform your judgment about, wow, this company is doing well. They've really put things together. When I come to my most probable selling price, I may, and here I don't have any financial information, but let's come back to that project that I had worked on. Okay, here. Let's see, which one is it? It's this one. Oh, well, I didn't use the import here, but now what I'm getting at is that that qualitative information starts informing me when I come to my most probable selling price. I can understand the flow of business over the years, and it also helps me support my placement in range. It can add a lot of value to your seller thousands of dollars to the seller, right? Well, that's where all of this information will be available, and you'll see that next week in the advisor plan. If you are a pro or an ultimate subscriber, reach out to us. We'll be running some specials to help you upgrade from the ultimate to the advisor. This is a great resource for you to be creating reports, selling BOVs, and I would suggest those should sell for at least $2,500. And you'll also see some really exciting things also regarding the SIM development and the broker opinion of value development and some one-click buttons that we'll be developing for all of that. So let's see if I can go on here and see if there's any more chat questions. I think we're covered there. Dan, you can let me know if there's anything else that we need. Seeing none, we'll stop the one more question and answer. Um, John, you asked about it. So is that the corporate tax rate? I like to refer to it as the effective tax rate. And again, for small businesses, those are typically passed through taxable on the personal level. But whatever that effective tax rate is on that personal taxes after adjustments, deductions, and so on, that's the rate that I would use going forward. Let's see here. I think that we've stopped sharing and that we'll stop sharing and want to thank you for attending here. We talked about the base and detail project, and we gave you a little insight into the transcript for seller interview, which you'll be able to upload. It looks like that will be deployed next week. And reach out to us if you have an ultimate subscription, want to upgrade to the advisor plan. It really gives you some additional resources, particularly with the AI resources, and saves a lot of time and increases the value of your reports and the quality of your deals. So thank you for attending here today. We look forward to seeing you next week. And until then, take care.